All right, I'm on record as saying that I think the odds are pretty good that this is a final 8-year cycle low right here in gold. Um, of course, there's going to be a huge battle here. The banking cartel is going to try and prevent gold from recovering this 200-day moving average. There was a huge attack in the miners yesterday to manipulate price back below that 200-day moving average. But I also think that we and especially if I'm correct, and this is a final 8-year cycle low, then we have transitioned into an easy phase. And let me be clear here. An easy phase, I mean a trending phase, but a trending phase doesn't mean that there isn't going to be any corrections. There will be corrections, and there will be big corrections along the way. What I'm saying is that price is generally going to be climbing from lower left to upper right. So I think we have transitioned into an easy phase where the market is going to be trending higher, and that is an environment where you can make a lot of money. So a couple things to look at here. This daily cycle, I believe this was day 25. Generally speaking, day 25 is starting to get a little bit late in the daily cycle, and you want to be a little bit cautious because at some point the cycle will top, and then we'll get a move down into a daily cycle low. Those can last anywhere from 4 to 8 days. In the advancing phase of a new intermediate cycle, then the RSI will get oversold, but it doesn't generally stay oversold for very long before the next rally starts. So let me put the RSI on there. All right, so you can see a character change here. This was the move down into the gold was forming that what I think is the 8-year cycle low. You can see that RSI was embedding in the oversold condition, and then once we got the bottom here, that's kind of changed. We're getting heavily overbought, and we're holding those overbought conditions. The corrected move, I think this was probably a half cycle low. Very, very mild. Couldn't even push the RSI down to oversold before the next rally began. Again, same thing here. Not, very, very mild correction, and now we're threatening to get overbought again. So, generally speaking, I would say that we're getting late enough to where you got to be a little bit cautious, because at some point here we're going to get that 4 to 8 day drop into the daily cycle low. And then when that happens, RSI will probably come down and tag the oversold condition, but it won't be able to embed in the oversold condition. So once it gets oversold, it should start to rally pretty quickly, and it'll come back up, and it'll want to embed again in the overbought condition. So that's what I would generally expect, except that may not occur during a move out of a multi-year, in this case the 8-year cycle low. So let me show you what happened during the initial intermediate cycle out of the last intermediate cycle low, 8-year cycle low that occurred at the end of 2015. All right, so here's our previous 8-year cycle low that occurred in December of 2015, and this is actually the bottom right here, and we had a retest, and then this daily cycle rallied 41 days, I believe is what this was. Well, actually, this isn't the top. This is the top of the cycle, so this would have been 50 plus days before this daily cycle topped and started to move down into its first daily cycle low. So not a normal daily cycle coming out of this major 8-year cycle low. This just ran, if you were looking for a top on day 20, you were, way premature. Even this top here on day 25, I believe, didn't really meet any of the parameters that would suggest that even this was a move down into a daily cycle low. It was just a minor little correction of about 4 days. and then a really strong trending phase began. So if you were expecting a normal cycle to top on day 25 and you were out of your positions, then you risked missing this huge, gigantic move as more and more people recognized that the 8-year cycle low was behind us and that they needed to get on board so they didn't miss the move. So smart money at this point was starting to come to the realization that we had left an 8-year cycle low behind, and they knew that the worst thing you can do is be out of position immediately after a multi-year cycle low. So they were using any and every little decline to get into position. In the meantime, retail traders that were still had the memory of the move down into this 8-year cycle low, they were trying to get out of the way of wiggles, and they end up missing the move. During this move here, we saw the COT reports got very bearish pretty quickly here, and I tried to warn people that the COTs don't work when you're coming out of a multi-year cycle low. They'll get extremely bearish, and price will just keep going higher. And I tried to warn people during this process that was probably what was happening, and that was another thing that was causing a lot of people to exit their positions because the COTs were bearish, and again, they missed a huge move. So let's go back to the present, and again, if this is an 8-year cycle low, normally we would expect a top here pretty soon, but as I said, it may be that we're not going to get a normal move, a normal daily cycle here. And one of the things that makes me think that might be the case is that the stock market is moving down into a daily cycle low. It's late in that cycle, probably going to bottom maybe around the FOMC statement. And when stocks bottom, then the dollar is going to have to drop. So, if the stocks complete their daily cycle low and start the advancing phase of a second daily cycle, that would imply that the dollar is going to be moving down, and that is going to be bullish for gold. So that could be the setup to allow this first daily cycle to rally a lot longer and further than what most everybody is expecting. I think most people right now are expecting a correction down into a daily cycle low any time now. We got some resistance zones. Of course, the cartel's trying to block gold from getting above this 200-day moving average. We got some resistance here in the 1850 to 1880 zone. And then my parameter to make the final call, the final confirmation I'm looking for to confirm, in my opinion, 100% that this was the final 8-year cycle low is a move above 1900, and especially if this first daily cycle can get above 1900 before we get a correction down into a daily cycle low. So it is possible that we put in the daily cycle low here, and then maybe Monday, Tuesday, and Wednesday they'll knock gold back down, and we could get a daily cycle low early next week, and then on to the races. But if gold continues to hold up well and makes a higher high early next week, then I think that opens the door for one of those really long daily cycles that's going to rally 40 plus days, maybe 50 days before the daily cycle tops, because I think once the stock market bottoms, then it's going to cause the dollar to drop, and that's going to be bullish for gold. So I'm watching a lot of people. I've tried to warn people again. You got to forget about what happened here. We're not in this environment anymore, and so we are absolutely in the advancing phase of a new intermediate cycle. So the surprises come to the upside when you're in the advancing phase of an intermediate cycle, and the odds are heavily in favor that this was a final 8-year cycle low, and so doubly surprises come to the upside in that environment. So there is a case could be made that if we don't get a quick correction back down Monday and Tuesday, then we could be looking at a daily cycle that's going to run 40 to 50 days before it tops. It will probably get above 1900 before topping, and then that's the point at which I would say, yes, I am 100% convinced at that point that this was a final 8-year cycle low, and we're now in the advancing phase of a new 8-year cycle. I'm pretty sure this 8-year cycle is where we're going to get our bubble phase, where gold is going to go to between $5,000 and $10,000. Silver, as I've said many times in the past, $100 silver is going to be a piece of cake, and $200 to $500 silver is not out of the question. Again, I think we're in a trending phase. We're in the easy period. Easy periods follow difficult periods. This has been a very, very difficult period for the last 2 years. I think we're done with that difficult period. We're now in an easy period, a trending period. Again, that doesn't mean that we're not going to have corrections. We will. We'll have bullion bank attacks. We'll have suppression. We'll have intermediate degree corrections that last multiple weeks. But generally, price is going to be trending higher, and you don't want to get left behind, especially once we break out above 2100 here. Let me widen this chart. Once we break out above this, then it's game on, and we are entering the bubble phase for gold. So depending on how quickly a price can get up to retest this, if it does it quickly in this intermediate cycle, then we can get a sustained move. I suspect that we're going to probably take an entire intermediate cycle, maybe out to February, before we could retest this. And then any breakout at that point is probably not going to be sustained. We'd have to have a correction and then another attempt to break out. And then that one would be sustained, and then the bubble phase would be on. But we're in an easy period. We're absolutely in the advancing phase of a new intermediate cycle, probably in the advancing phase of a new 8-year cycle. You've got to use different strategies in this phase than what worked during this phase. Taking profits quick is a recipe for getting left behind, as we saw right here. If you were trying to take profits quickly, you missed one hell of a move right here. As the more and more people recognize that, hey, we just left the 8-year cycle behind and we got to get on board. And so any down day was a buying opportunity, and smart money got into position, drove this move, and left the retail traders behind. Same thing is at risk here, as more and more people potentially recognize that hey, this was an 8-year cycle low, and we got to get on board. And those people will ride this move up to retest these highs. The retail money is going to be stuck in this mentality of trying to take profits quickly, and they'll miss the move.